Welcome everyone and thank you so much for joining in. So what is it? Is it an actual breakout or is it just a bear market rally before price again starts showing this corrective movement? Because we found out on my previous videos that the price in a daily time frame was forming this falling wedge. Falling wedge is considered as a bullish scenario. We are aware of that. We said if we break the upline resistance from this falling wedge, then there is a very high probability that we are going to test the bottom CPI line, at least the bottom CPI line, before choosing a trend direction. Why? Because this bottom CPI line was a VCPR. VCPR usually attracts the price before it chooses a trend direction. And now in our case, since we have already pierced through the bottom CPI line and getting rejection at this central CPI line, this central CPI line, which is around 21,500, 21,600, is one of the most important resistance line, because the central CPI line, as soon as it gets broken, the next target according to the CPI is going to be 22,300, 22,400 for the upcoming days for Bitcoin. But if we do remain and also fail to break above this 21,500, 21,600 range today, then expect some sort of a corrective movement to test the support around this bottom CP line, which is around 20,900, 20,800, and then again showing this movement here in this manner, trying to break the central CP line and also reach the top CP line for Bitcoin. But one thing what we have to definitely keep in mind, if we look at this price structure in a bigger time frame, and if we also look at this capitulation scenario in the past price action, whenever the price of Bitcoin has started this mark-up phase in this manner, what has happened before we started with an actual mark-up phase? First, we have ended the capitulation phase. In our case, if you look at this capitulation phase, it has just started. So we have been very clear about this. For an actual mark-up phase, first we need to end this capitulation phase, and in our case, as you can see, the end might not be near. I mean, we could be seeing some more range bound, even plenty of fake out, dead cat bounce type of scenario before price finally finds bottom and also start with this new mark-up phase. The reason why I'm actually expecting the price of Bitcoin to show further range bound for at least a month, even a year, before showing an actual mark-up phase, because if you look here, if you look at this, right, if you look at this in a weekly time frame, you know, we have talked about this Wyckoff's distribution schematic too. And right now, what I've been actually seeing is people talking about this double bottom. Yes, we can actually assume that this could be forming a double bottom, because in a weekly, if you look at this formation, this does looks like it could be forming a double bottom. But this double bottom, if this is going to play out, then you can see where is our neckline. Our neckline is going to be between 24,300, 24,500 area. So right now, until we come across this area, we need to overcome the resistance which we have from this CPI line. But I want to make it very clear here, if the price, right, if the price breaks the resistance from the central CPI line, bottom CPI line, finds support over it, and also touches the monthly R1 line, then guys, I will be actually talking about bullish continuation after that, because monthly R1 line only gets tested when the trend is ready for this new impulsive movement. But for us right now, since the price is still struggling to break out of the central CPI line, even the top CPI line is still open, we have to be very, very careful. And now if you add another weekly time frame and also expect this price continuation to happen like this, right, a bullish continuation towards this 24,000 range, and we know this line must also be broken. I mean, the 200 weekly SMA, which in the past price action has always acted as a very, very strong line of support. This red line, each and every retracement on that area, after that a very nice impulsive movement. You can see this red line, the 200 weekly SMA, has always been a very important line of support. But in our case, since we have already failed, this exact scenario also unfolded here. Price in a downtrend, you can see we tried breaking above the 50 weekly SMA, failed to find proper support. We had this bigger corrective movement. A very similar scenario unfolded here. We came below 200 weekly SMA and again had this relief rally where we found support above this 200 weekly SMA, but unfortunately the support did not lasted longer, and after that we saw corrective movement. And now if this is going to be another impulsive movement forming a double bottom, then we know even this 200 weekly SMA around 23,000 is going to be a very strong line of resistance. So the price of Bitcoin, until it's not finding proper support above this 200 weekly SMA, not testing the monthly R1 line around 23,000, any sort of impulsive movement for the immediate short term could be looked as a bear market rally. And now we are aware our market is still very much correlated with the traditional market. That's why today I am also going to talk about S&P 500. But before I start talking about the S&P 500 and also this here in a smaller time frame, guys, if you haven't destroyed that like button, then please do it right now. And for those individuals watching this for the first time, hit the subscribe button and the bell. Now, if we look at this price action here in a 4-hour time frame, you can see very clearly yesterday we talked about the inverse head and shoulder and also the right angle broadening wedge formation. According to the right angle broadening wedge, we were getting rejection around the upper line area, but you can see, guys, the right shoulder was never formed, which is nice because the price broke above this upper line area, and as soon as it broke above the upper line area, we started with this impulsive movement. So according to this right angle broadening wedge, if this trend continuation is going to happen, then we are well aware this upper line area is where 22,000 is where we could be heading in the upcoming days. And if that is going to happen, then according to the CPI indicator, you can see the top CPI line might also be tested. And if you follow this falling wedge target is around 24,000. So that's why this double bottom formation here in a weekly time frame would make a lot of sense. But before we actually call it a double bottom, first we have to overcome this obstacle. And now let's find out what S&P 500 is trying to flash us here. So guys, now if you look at this S&P 500 index and if you also look at this formation here in a monthly time frame, what I want to show you guys is this very important price movement. Whenever the S&P 500 in the past price action has showed this impulsive movement and also a corrective movement, where did the corrective movement ended? The corrective movement ended after finding support at this rising trend line. So each and every retracement around this rising trend line, after that the S&P 500 has started with this very nice impulsive movement. So in our case, if you follow this rising trend line, if you look at this S&P 500 price, we are in a big trouble if it actually gets gravitated towards the rising trend line before again showing an actual movement here in this manner, because we know in the past price action this rising trend line here in a monthly time frame has played a very important role, acted as a support. Also after testing the support, price has started with this new markup phase. So in our case, since this is a clear downtrend, because you know, if I would switch this into a weekly time frame, you can see very clearly the price here could be forming a bullish formation like this, which can be called as a falling wedge. Falling wedge is a bullish scenario, but as long as the price is going to remain below this upper line from this falling wedge and also fail to break above it, this could still be playing out here in this manner. I mean, even if this is going to be looked as a falling wedge or bullish continuation pattern, as long as we are going to stay below this upper line area from this falling wedge, there is a very high probability that we could be getting gravitated towards this rising trend line here to the downside before starting with an actual markup phase. Because if you look at this price action in a very simple way, let me switch this into a daily time frame, and if you monitor the price structure around this area, you can see a very similar scenarios unfolding, guys. I mean, if you look at this price action, when we had a rally during a bear market like this, impulsive movement or so-called dead cat bounce, had another bigger retracement, and after this bigger retracement we even made a new high, but price started with this corrective movement in this manner. And now if we look at this example here and look at this example here, just like with the previous price action, after this corrective movement we had this relief rally scenario or dead cat bounce, price showed a bigger retracement, just like here. And after showing this bigger retracement, what happened here? We even made a new high, and this exact happened here, new high, right? And after this new high, what did the price did? After that, we had this bigger retracement, and in our case, this relief rally could be playing out just like this one here, guys. I mean, if you monitor the price structure during this downtrend, we also had a very similar looking movement, relief rally, corrective movement, a very nice relief rally, and after that a corrective movement here in this manner. And now if we look in our case, a very similar scenario is unfolding, relief rally just like this one here, corrective movement, and now this relief rally is looking exactly like this one here. So if we are not going to break above the upper line which I showed you from the falling wedge, then expect this trend also to show further retracement here like this, guys. So that is one big reason why I want to warn you, until the price doesn't break out of this certain line of resistance, certain line of support, we have to be very careful. And the reason why I still don't believe the market here, I mean the S&P 500 and even the crypto market bottomed yet, because if you look at this S&P 500 Shiller PE ratio, what does the Shiller PE ratio tells us? The Shiller PE ratio gives investor a read on whether the stock market as represented by the S&P 500 in our case is overvalued or undervalued. The higher the Shiller PE ratio, the more overvalued a market. For context, over more than 100 years, the average and medium Shiller PE ratio has been around 15 or 16, spiking up significantly higher often before market crashes. So what is it trying to show us? Whenever the Shiller PE ratio in average, right, let's say was around this 30, after that the bubble has burst. So in our case right now, if we look at the Shiller PE ratio, we almost reached the 40, and now since then we are seeing this corrective movement. So the average, as you can see, is going to be around 15 to 16. So we are way above the average line. So this Shiller PE ratio in that case is still predicting the market is overvalued. Even after this corrective movement, the market is still overvalued. Beside the Shiller PE ratio, if you also look at this margin debt is the money that investor borrows in order to invest in stock. This debt is usually collateralized by the stock investment themselves. When total margin debt increases, the overall level of risk in the stock market increases as well. Then, if the stock market falls, the value of the collateral behind margin loans falls, and so investors need to pay back the loan, right? A margin call by selling stocks, which itself drives the overall market lower. Very simple way to understand: the higher overall market margin debt increases, the further and faster one could expect the market to fall during the next downturn. So high margin shows that investors are extremely bullish, so much so that they are willing to borrow money in order to invest in additional stock. Whereas falling margin, this is a very important point, whereas falling margin levels suggest the opposite, that in an aggregate, investors have little faith that the market will continue to rise, and so are not willing to borrow money in order to invest further. And right now, if you look at this from July 2022, the margin debt is clearly falling. And if you also look at the total margin debt, you can see this is a clear downward rally. So margin debt falls, so does the S&P 500. And if the S&P 500 falls, so does the crypto market. And that was the reason why I'm actually combining all of this, just to show you guys that even if we are seeing any sort of a relief rally in the medium short term, please let's not get overexcited. Until the price is not breaking certain line of resistance and also holding certain line of support, we still have to be careful. So this is what I wanted to share with you in today's video. If you enjoyed my work, then please destroy that like button, and for those individuals watching this for the first time, hit that subscribe button and the bell. Now by saying this, I'm signing out. My name is Anup. Bye bye.